So we don't hear any. I don't hear anything.
Hello, can you hear me?
Yes, now is
All
right.
right, all right. Right, so as I was saying, that with the setups, right, I was teaching you the setups from the beginning. So we have four types of setups, okay? And the first setup is the type 1.2, but we usually call it a stop hunt, okay? The stop hunt is the wick. This will be a wick here. So when you see a stop hunt, it means they are taking out liquidity. They're taking out the old high and old low. So now if you want to know whether they're going to reverse, now you want to see a BMS. A break in market strategy is very, very important, because that is confirms that price is reversing the trend. Okay, so that's why we want to see a BMS. So after the stop hunt, you wait for the BMS, then you trade the return to order block. Then you sell. We always trade the return to order block or breaker or mitigation block. Then the second one is the breaker. This one is called a stop raid. Okay, stop raid. RAID. That's the stop. This is the BMS and the BMS. Okay, that's the return to breaker here. Or sometimes they'll go past the breaker to the order block, then they come down. So that's the second setup. And then the third setup is type 2. Okay, so in the beginning, I just said it. In the beginning, when we began, I said type 1 and type 2 so that I make it easier for you guys. Okay, but the actual name is stop hunt BMS RTO. Both if I had used this stop hunt name, it means I would have had to introduce lesson 5. So that's why I did not use these terms yet. Okay, because I was we were not on this level yet. That's why I just said type 1, type 2 to make it easier. But so the first one is stop hunt, BMS, return to order block. Stop raid, BMS, return to order block, or also breaker. Then type 2 is called SMS. Okay, what is SMS? SMS means shift in market structure. Shift in market structure. Then you wait for the BMS, then the return to order block, which is also our mitigation block. Okay, so this is overall this type 1, this type 2. Okay, then the first setup, that's our order block fair value gap. There are some students who only trade this. They are looking for only this order block fair value gap in line with market structure, in discount and premium. They are only looking for the fair value gap and order block. So they trade the return, then they sell, or the price comes back here, then they buy. Right. So these setups, you can either choose one, or you can choose 2, or you can choose 3, or you can choose all of them. It's up to you. Okay. There are some students who only trade breakers. There are some students who only trade break only. They don't care about this or this or this. They only want to see a breaker in line with their market structure and their high time frame key levels. Some students only want to see a stop hunt, the one with the wick. That's the only one that they're looking for. And some prefer type 2, which is our shift in market structure only. Okay, so you have to choose the one that you like. Or if you want to choose all of them, still it's up to you. Okay, that's why you need to find one and then you back test it. Back test it. Also, this one here can be found inside these 3. So this one can be here. This can be right here. This one, you find it here. After this BMS, there will be an order block fair value gap and price will come back and you sell. Same thing, this one can be found here also. Okay, or here. Right here. So when you see this BMS, the order block that broke market structure is actually an order block and a fair value gap. So this can be found here. So you can actually combine this and these other 3 together if you see it. And then there's also a breaker fair value gap. Yeah, it's not here, but it's also another setup. Breaker fair value gap, where there's a breaker here, and right here there's a fair value gap. Another good setup. So like I said, you can choose all of them or you can pick the one that you want. It's all up to you. But the key things to note are what I told you from the beginning: market structure. You need to know the structure. You need to know where you're coming from, where you are right now, and where you're going. You need to know your range, your internal range, external range. You need to know your internal range liquidity, external range liquidity. You need to know all those things on higher time frame, so that on the lower time frame, We're now looking for just setups. We're just looking for a setup. Right. So we have this example here. This is a stop hunt. Right. So this was a high, this was a low, this was a stop hunt with a wick. Okay. Then now you need to wait for the BMS. Where's the BMS? So excuse me, this was the low. So now after the stop hunt, wait for the BMS. So now there are some students who are aggressive. Okay. What do I mean by this? If this was a 1 hour chart, right? If they see this 1 hour chart, this 1 hour stop hunt, okay, this means that price does not want to go up. A stop hunt means price does not want to continue going high. Because maybe there was a higher high here, higher low, higher high, higher low, higher high, higher low. This means that they don't want to go up. So some students, and especially if this was our key level, our old key level here. So some students, what they would do is if they want an aggressive entry, after this 1 hour candle closes, this stop hunt, they will go to 15 minutes and look for an early entry, an early aggressive entry. So 1 hour stop hunt, but 15 minutes BMS and RTO. That's their first entry. That will be the first entry, which is an aggressive entry. Then now the second entry is they wait now for the 1 hour BMS. And the 1 hour BMS was here, this one. Okay. Then now they wait for the return. When price comes back, then they sell. So the first entry is an aggressive entry. The second entry is a safe entry. So it all depends with you. What kind of a trader are you? Are you an aggressive trader? Are you a safe conservative trader? It's up to you, right? This chart, I used this chart last time. So as you can see, price came here. So we're now looking at this internal, okay, on overall, so the chart was like this on the higher time frame. But now looking at these internal structures here, there was a lower low, lower high, stop hunt. Now you want to see a BMS. The BMS was here, and then you mark the order block, and price comes back to the order block. Then you buy here. This was a short-term buy for those guys who are aggressive. They want to. So for those students who like to buy and sell at the same time, even against the trend. So you can buy here. Short-term though, price goes up. You take your TP. Then this was now an order block again. Also, this is the BMS order block. So price goes up, comes back. You can also buy here. But these are all counter trends, and I do not recommend you to counter trend. Never counter trend. Stick to the downtrend. If we are in a downtrend, only sell. If we're in an uptrend, only buy. But this would have been a counter trend. So now, how do you know that the price does not want to go up here? It was because of this. Price did a internal higher high, higher low, higher high, higher low, stop hunt. Take out this liquidity here. After a stop hunt, you want to see a BMS to confirm the reversal. This was the BMS to confirm the reversal. And then this was the return to order block right here. So you would have sold here. Okay, this is why you need to be patient in the market. You have to be very patient. Be very, very patient. BMS, return to order block. Then you sell here. Then now you are targeting all this liquidity here. We're targeting this liquidity and this one. Boom. So now later on, when price comes back again, so this is now what is it? We now have a mitigation block here. This is a mitigation block. The mitigation block is found in what? In this. So later on, my first key level is this area here. Then my second key level is up there, which is this is the order block. So if price comes here and we get a good sell, we sell. But if there's no setup on lower time frame, they go up here, then we get a setup, then we sell again. This is a breaker setup. Higher high, higher low, but then there was this low here before the BMS. then higher high, then BMS. And now this was our breaker, this one. And this was the order block. So price broke market structure and made a lower low, and this was the return to breaker. So you would have sold here, depending on the time frame. Depending on the time frame. If this was a 4 hour or 1 hour, when price comes back to do the return here, you go to 5 minutes and you look for a new setup to sell, to validate your higher time frame breaker. If already this was a 4 hour breaker or 4 hour order block, and then you get this on 5 minutes or 15 minutes, then you can sell here. Well, this is confirming our higher time frame key level. Now, for our setups, this is our setup here. There's a reason why I highlighted this. This is my number one setup. Okay, my number one setup. And why? Because this is a clear indication that the price does not want to reverse or to continue the trend. They want to take out liquidity and reverse. So there's something that we call an LP. LP means two things. LP means two things. So this is an LP. LP means liquidity pool. Liquidity pool. Liquidity pool. That's the first meaning. This is a liquidity pool, this one. This one here. This is a liquidity pool. Then the second meaning is this. This is an LP. A previous area of where price took out a liquidity. We call it a launch pad, an LP. Okay, so price is going to launch from this area here, this launch pad. So when you hear me talking about LPs, let's say those weekly videos, and I say that this is an LP, I'm talking about a launch pad. Okay, when I say this is an LP, old LP, I'm talking about the launch pad. And a launch pad is a very strong support and resistance for us, for ICT traders. It's a strong area of support and resistance. Why? Because that's the area where they took out liquidity and they started to reverse. So they took out liquidity and they are now selling. Took out liquidity and they're now selling. So now that's a good area. So whenever they took out liquidity and they're now selling, there's always some orders remaining here, some sell orders. So they need to come back and get those orders into the market. So when they come back, then you sell with them. You are selling with them. This was also an LP here. This was also an old LP. This one here was an LP. Why? Because there was a stop hunt with the wick. Stop hunt, BMS, return to order block. Okay. Just 1 second, guys. Just 1 second. Okay, guys, I'm back. Right, so let's go to the next chart. So these are my old examples, right? These are my old charts that I used to mark, I think last year. So what I do is at the end of the week, I go over the week, what happened on daily, on 4 hour and 1 hour. What was the setup on Monday, setup on Tuesday? What was the setup? How did the setup come? What did I mean? How did I miss the setup if I missed it? So I'm looking at those and I'm marking them. so that on the weekends I can just go over them. So for this setup here, these are my old charts, right? This was a 1 hour chart. So this is this pink here, this one, the one that you see in the background here. This was what is it? This was a 4 hour breaker inside a daily order block. Yeah, you can't see, but it's written here. It's a 4 hour breaker inside a daily order block. So it was a really good key level of selling, this one here. So when our price came to that area, higher high, higher low, then higher high. First reaction, right? Then higher low. So we want to see, is this area going to work? Then there was a fail to make a new high in the BMS. So now this area here is a good area of resistance for us. Why? Because with the lower time frame BMS. Let's go to the to this chart here. So for aggressive traders, the first entry was this one. This was the first entry. There was a higher high here, a higher low, a higher high, a BMS, a return to breaker here. This was an aggressive entry. For those guys, people who are safe, they wait for the 1 hour BMS. Because remember, like I think, when did I mention that? Okay, I think I need to mention this. I don't know if I did. For a monthly, let me use red. For a monthly order block. So these are order blocks, all of these. Okay. Yeah, feel like this. When you watch the video, I want you to pause here. Because I'm using the what is it? I'm using a Zoom to annotate this, so I'm going to remove this later. So order block, and then this side we want a BMS. So for a monthly order block, what you want is a daily BMS to support that order block. For a weekly order block, you want a H4 BMS. So when price gets into that weekly order block, you want a 4 hour BMS to confirm that the weekly order block is going to push price down or up. For a daily order block, you want 1 hour BMS. For H4, you want M30 or M15. For H1, you want M15 or M5. For M15, this is for those guys who are junkies, who trade 1 minute. You want either a 5 minute or a 1 minute BMS to support this. But most of the time is for 15-minute order block, it's 1 minute BMS. That's the one you want. So this is what you want to see to support your order blocks. This is what you want to see. This BMS can be type 1 or type 2, can be a stop hunt, stop rate, SMS, it doesn't matter as long as there's a BMS.
H4, I can't read it. By the 4 hour chart is to watch in which chart? I can't read it. Yes.
Let's see. Daily 1 hour, right? 1 hour BMS. Then H4, yes. You want M30 or M15?
M30 or M15?
Yes.
Okay.
Right. So like I was saying, right, this was our 4 hour order block. Okay. And okay. Our 4 hour breaker inside a daily order block. Okay. So for an aggressive entry, you could have used the 15 minutes return to order block here. For a safe entry, because it's also a daily order block, right? We said daily order block, you want a 1 hour BMS. So this was the 1 hour BMS. This was the 1 hour BMS here. This was the 1 hour BMS, a safer entry. So when we broke market structure here, this was the daily the 1 hour order block before BMS, and also a 15-minute order block before BMS. So your entry was here. You could have sold here. You could have sold here. And then now there was a consolidation. Okay, what is a consolidation? Consolidation is market is building up orders. They are building up sell side and also buy side. Okay, just like I told you last week. First, they took out sell side. Now we're left with buy side. Then they went up to take out buy side. Okay, it was actually a BMS, but on 1 hour it was a stop hand. It was a stop hand with the wick. Okay, so they did a BMS. So they took out sell side, then took out buy side here. Then they broke structure here. Then this was the BMS, and this was a breaker here. This was a breaker that was used to take out all these highs. So first reaction was on the breaker. Now up here they left this fresh order block here, and there was a small fair value gap just underneath, small fair value gap, and right here they were also equal highs. Okay, so what did price do? Price first just before London open, there was a return to breaker first. Then price went down, and then now they came back now. This one, LPRTO. LP was on 1 hour. It was a 1 hour stop hand, but on a 15-minute chart, it was a clear BM. It was a stop rate. So now they came back to take out these highs, close the fair value gap, and also return to order block. This one here. So since this setup was on 15 minutes, you could have gone to 1 minute here and look for a BMS to support this 15-minute order block. And then also now looking at this chart, also just looking at this chart, there was also a low BMS, a lower low, lower high, stop hand. Now you want a BMS to confirm that price is now bullish. This is the BMS. And now this is now an LP, a launch pad. This whole area is a launch pad. A previous area where they took out liquidity and decided to buy. How do you know that they decided to buy? Because there was a BMS, a bullish BMS. So this is an area of support for us. So you would have bought here on this day. If you miss this buy, you would have bought here the next day in Asia. If you miss, there was another entry again here in London. Okay, so as you can see, this area is acting as a support. Is our support here. This is a strong area of support here. 1, 2, 3. If you miss this one here, you would have bought here. If you miss this one, you would have bought here. If you miss this buy here, there was another breaker entry here. Lower low, lower high, lower low, BMS, return to breaker here. M15 breaker void entry. There was a small void here. This was the entry. So there were so many entries here. Okay, the one from yesterday, the one in Asia, the one in London, and I think this one was in New York. Okay, I don't think it's New York though. I'm not sure when was this. Yeah, I think no, it was still in London. So in London, there were two setups in London, and then now I remember the setup. Now for this chart here on 4 hour, this was the higher high. This was the higher low. This was the higher high. This was the higher low. Complex pullback. And then this was the new higher high on 4 hour. On 4 hour. But because this is 1 hour chart, it's like this. Just like I told you that sometimes 4 hour is a clear structure, but 1 hour is giving you complex pullbacks. So now this was a higher high now on 4 hour. Return to the same area again. So then now they were coming to take out this high. Okay. All the people who sold here first, who sold here, they were coming to take them out. And then now after they took them out, the price just went crazy, went down. And then this was now the BMS here, as you can see, H4 BMS. Okay, and then now lower low, lower high, BMS. This is the order block before BMS, just like I told you. Lower low, this is the return. There was also a fair value gap here. And this is the fair value gap order block. So you could have sold here. If you were an aggressive trader, you could have just put the sell limit here. For a safe trader, you go to the lower time frame and look for a support, lower time frame support. This chart has no higher time frame. Okay, I think no, everything is written here. Yes, everything is written. So this is so this area here, this was a H1 SMS. Okay, there was a higher high, higher low, failed to make a high BMS on 1 hour. Now, inside that 1 hour SMS, there was also a breaker and a fair value gap setup on 15 minutes. So when they broke structure here, there was no return to that breaker. Okay, so they decided to build up liquidity. There was a build of liquidity here. These highs here, price came down. You could have sold here, all these return to order blocks. So you could have sold. Then price, what do we have here? I don't remember here what's happening here, but I think this is a daily order block, this one here, or 4-hour order block. So there was a lower low, lower high. Then just before this lower low, there was an order block here. Then there was a BMS, right? So there was a new lower low. Then no lower high, there's a BM. So now we're the breaker. There was a breaker here, this breaker here, and this was the return to breaker. And 15 breaker, breaker here. And also this was a stop hunt. Do you see this here? There was a stop hunt here. Here. Of this line here, I think this was an old low. There was a stop hunt. So we have an old stop hunt and also a breaker setup. Then now, once we are now buying here, we are now targeting this buy side, all this buy side here, the buy side. It was buy side, and then price. Let's look at the market structure now. Higher high, higher low, higher high, higher low, higher high, higher low. We don't even have any bearish BMS. Then higher high, right into the fair value gap breaker. So now, for a aggressive entry on 5 minutes, this was the 5-minute BMS here. This low here that you see here was the 5-minute higher low, and this was the BMS on 5 minutes. So this was the 5-minute return to order block, aggressive entry. If you wanted a 15-minute entry, this was the BMS, and this was the return to order block here. So sometimes they do this. I think I told you last time. Sometimes that they do this, where there's an order block here and another order block up here. First they will come here and then they'll actually come down. So if you sell here, then they'll go up again to the last order block and then they come down. So now you need, that's why you always need to whenever you see the BMS, always check this area. From the BMS to the high, how many pips is it? How many pips is it? If it's like less than 10 pips, I'll sell here and put my stop loss above here. But if it's like 20 pips, then I'm gonna wait for a new setup here. I'll wait for a new setup because I don't want to my risk to be too big. So this was now the return. I think from here to here, well, this is UJ. UJ is not that volatile. So I think this was about less than 10 pips from here to here, less than 10 pips. And then this on the next day, there was a stop hunt, a BMS, a return to breaker. Well, this was all in Asia. I was sleeping here. Then when I woke up, there was this lower low, lower high, lower low, stop hunt again, BMS, return to breaker. All of this is happening in our key levels, in our key level area. Okay, so we have a 1-hour stop hunt here and a 15-minute BMS. So this is an aggressive entry. A 1-hour stop hunt, 15-minute BMS, and return to order block or breaker. That's an aggressive entry. So you could have bought here. Then I think this was now the 1-hour return to order block. So you could have also bought here. What is the rejections at H1 order block equilibrium? What was, I think it was this one, yeah. And this is another setup. This is a 1-hour chart. Sorry, 1-hour order block, I mean. H1OB, this one. So now if we go to the lower time frame, we had this fresh order block here, and there was another one here. Now, what happened? There was an AMD. This was the accumulation here. Price was in accumulation here. Then M1, first manipulation. M2, return to order block. You buy here. Okay, aggressive entry. For those, some people don't even wait for a lower time frame BMS confirmation, they just buy. So you would have bought here, but for a safe entry, there was this BMS here. All these BMSs, and this was the return to order block, this order block here. So this would have been your entry here, this. Your safe entry here That was the safe entry, this one. Aggressive entry with no BMS support, this one. The one with the one with was safe and is a clear BMS is this one. So it's up to you, but I prefer my my safe entries. Lower low, lower high, lower low, lower high, BMS. So this is also going to happen to you. You're going to see this a lot. What do I mean by this? You have your key level here. Price is coming down to your key level. Then the first touch, then they'll do a BMS. And then you'll come back and then you buy on the order block, but then they'll come and take you out. And now they'll go deeper into the key level, into the order block. Then they'll now give you a new setup. Then they go high. That's what they did here. Lower low in the key level, then bullish BMS. So you would have bought here, either on this order block here or down here. And once you buy, they take you out. This is why we need to use risk management. In as much as this is institutional trading, you need to use risk management because sometimes they will take you out. If price is not ready to go up yet, they will take you out. You buy here on this order block. And if there's still a lot of liquidity up down here, where your stop loss is, they will come and take you out. Then they'll give you a new setup now. Then they'll go up. As long as they are still bullish, they'll give you a new setup. That's what happened here. If you were bought here, then they take you out. There was a lower low, lower high, stop hunt, BMS, return to order block here. This was the another entry. So if they're taking you out here, this was the next entry here. And I think I'll talk about risk management next week. So that's what the market does. As long as if this is your key level to sell, and they give you something like this, and then you sell here, then they come and take you out. As long as they are still going to sell on this area, they'll give you a new setup. They will come back up here and give you maybe a type 1 again, then now they'll sell. So if your stop loss was here and then they took you out, wait for a new setup. They'll give you a new setup. But if they are not, if it was a fake setup and they don't want to reverse on that area, then they'll continue going high. They would have just continued coming down here. And this is what we call a seek and destroy day. Seek and destroy. They are looking for liquidity and they're just destroying everyone. They are seeking buy stop and sell stop and just destroying everyone here. There's nothing is clear here. But on the lower time frame is clear. Or if you go to 1 minute, you could have bought here on this return. Where again? Also sell here. Yeah, you can buy here on lower time frame though. But I'm not a 1 minute trader. I don't trade on 1 minute. But on this day, I do not even buy and sell because it's just a mess. Everything is a mess here. This is a seek and destroy day. Another setup. This is a 1 hour order block. Price broke market structure. So now when you see your 1 hour order block, also go to the lower time frame and look for other setup that had no return to order block or breakers. We had this LP here. There was no return here. So this is our confluence. We need to confluence time frames together. So this is my 3 minutes. Okay. So this is my order block here. But this was my breaker. There was also a breaker here. So first return was on the breaker. This is why you guys need to practice a lot because you can be able to see all these things. First return was on the breaker. Then now the second return was on the order block. So if you had sold here, actually there was no setup though. Well, this was a 1 hour order block. There was no setup here. This was a lower low and lower high. So there was no setup. Then BMS, then lower low, lower high, stop hunt, BMS, higher high, higher low. This was the buy. This was your buy here. Your buy was here. The buy was there. That's why you need to be patient and wait. Be very patient and wait for the setup to come to you. was happening here? Okay, yeah. So this is why I was saying, I think last week, right, that I always want price to take out Asian highs and lows before I buy and sell. Why? Because this was Asian high, right? And look at this setup here. Even though there was a higher high, and then there was a higher low here, and then this was the BMS. So you could have sold here, but the reason why I would not sell here because we have not taken out Asian highs first. I always want price to take out Asian highs and low. Why? Because retail traders, they're always taught to put their stop losses below here and above here. So I know that the market will be hunting those Asian highs and lows. So even if I get a setup in Asia, I do not buy and sell. I always want them to take out the highs and lows. And they came and took them out here. And then now BMS, and then this was the return. You would have sold here a safe entry now after they take out Asian highs. So I always want them to take out Asian highs and lows, always, before I sell or buy. Because they'll give you a fake setup and then they're creating all this liquidity here. All of this is liquidity. These stop losses above here. Then they come and take them out. And now set up. 1 minute, only 1 minute, okay.